Hey guys, thanks for checking out the channel again. This is going to be my second video of the new channel for Chaos Incorporated. Today's subject is titled The World's Financial System. Is it beyond repair? It might be time to panic, guys. I put together some notes today and I'll walk you through where we've been, where I think we're going, and how this all ties in and kind of I see really the end of an era of financial money printing and into a world of the revenge of the real economy. And I think we'll be probably doing a lot of follow-up videos around that. But as many of you know, the world we're in a pretty uh, dangerous situation here. Not only with the war in Ukraine, the pandemic's still around. That's going to continue to rile the China market, as I'm sure you've all followed the Shanghai lockdowns. That's going to continue to roll through cities throughout this year and probably all through next year. Most people have not had COVID in China, so it's almost impossible to keep out no matter how draconian the measures. And over U.S., I expect in fall we'll have a massive rebound as well, as most people's antibodies are gone. So once again, it's going to be the reaction to all this pandemic, a reaction to war, and all this is going to bring down the financial system. I think it's honestly a little bit time to panic. So what am I talking about here? So let's go back pre-COVID, or even pre-financial crisis, 2008. 2008, the Fed's balance sheet was $800 billion. A couple years ago, it got up to 7 trillion. Today, it's 9 trillion. They're projected to hit 40 to 50 trillion dollars on the balance sheet, all money printing. So, what's really taken the world off its financial stride at this point, and I'll describe a little bit later, is the inflation. So, going back to the start, we went into the financial crisis. We've been in a world of money printing. So basically, the last 30 years, you've seen the rise of China, amazing productivity, manufacturing. They learned how to build, they learned how to manufacture. They went high tech, they escaped the middle income trap. And now their major challenge is dealing with COVID and where to put their current account surpluses. They're the manufacturer of the world. The U.S., on the other hand, went to total money printing. So everything's solved with money printing. Just print more money and stuff the banks globally with money. That didn't go into productive uses. That just went in to buy real estate, stocks. They funded all the hedge funds, the private equity companies. Private equity companies come in, they buy a company, outsource everything, close the factory, close the workers, and just do warehouse operations in the U.S. This is the root cause of the American economic destruction that has happened, and is why now the country's going to have to rebuild. But let's go back in time to 2008, the financial crisis. As I mentioned, we went from less than a trillion on the Fed's balance sheet to 7 trillion a few years ago, and now 9 trillion. That's not going to stay that number. That's going to increase. The problem is, does the Fed have another bailout? Can they fix the system? Is it repairable? I'm going to argue it's not, because these things are exponential. We never fixed the crisis from 2008. One bank went under, Lehman. Maybe one person went to jail. Everyone else got bigger. So the world's derivatives now are over $1 quadrillion. The banks have only levered up. The two big to fail banks got bigger. We're going to see the plumbing break on the global financial system, and I'm going to walk you through how that's going to happen. As I mentioned, if you just look around today, 30% of commercial real estate tenants are not paying their landlords. So something broke, and I think that started with COVID. You can't shut down a country for several years like we did and just have the massive chaos that was created. We're stuffing airlines with money. We're stuffing cruise lines with money. They're shut down. Nothing's happening. Nobody really went bankrupt except small businesses and restaurants. They got washed out. That can't really be solved with money printing. So we are where we are today. The first bailout in 2008, bail out the banking system and restore the credit system. Now keep in mind, where we are going now is going to be a credit event. In 2008, at its core, was a credit event. When the banks went down and they couldn't loan each other money, everything stops in the United States because it's become a financial paper shuffling economy. They don't want to sell you a car, they want to lease you a car. They don't want to sell you furniture, they want to lease you furniture. Everything's on credit. And when the credit stops, the entire market drops and just stops dead. And that's why all the car makers went bankrupt. You can't take a huge capital intensive business like that and then just watch your sales drop 50% overnight. It's not designed for that. So, in '08, I did argue they should bail out the car companies as it wasn't their fault, and I think that was good. You had to stop the displacement, the unnatural displacement of the normal productive businesses in the economy. Now, fast forward to today, that $20 trillion bailout in 2008, the next time we hit the credit event is going to be $200 trillion, because these things are exponential. You just add layer upon layer of debt. And meanwhile, the productive economy you see in the United States here, we just have to wait at the port for the Chinese ships to show up. I mean, it's pretty much a disaster. So we had the financial crisis, which never got fixed. We went into COVID, which China's still dealing with in terms of economic fallout, and that'll be rolling through this year and next year. And then we moved into the inflation. And the inflation is really what is the monkey wrench in this whole system. They've been able to get away with all the money printing for decades upon decades under the narrative like there is no inflation. It's not there. Where is it? Well, there was rapid, massive inflation. Anything an American had to touch here went up hundreds of percent. Healthcare, universities, any types of services, legal fees, you name it, are up hundreds and hundreds of percent over the decades. Now, anything Chinese manufacturing did brought everything stable, or even went negative. Televisions, computers, these types of things, clothing, anything sold in the retail outlets, the Walmarts, the car components. Basically, the China manufacturing dividend lowered the cost of all real goods, but everything in the service sector went up dramatically. So, however, now that's broken. The inflation is going to completely derail the financial system. And the supply shock has put a complete derailment in the physical goods system. So what do we mean? Let's talk about the inflation. If you're a bond manager, are you going to invest in a negative yielding bond in Europe when German inflation year over year this year is 23%? You lose all your, do the compounded annual growth equation, you lose everything in 3 to 4 years, 5 years. Even if you're getting a 1 or 2% bond out of the U.S., a 2 or 3%, 30-year treasury. You're going to buy that in a 10% inflationary environment, which could get much worse. By the way, once the inflation genie is let out of the bottle, there's no stopping it. You just can't put the brakes on it. You can't control it. And with the supply shock and war, it's going to be almost impossible to control. So where does that get us? The inflation has now led us to a war. I talked about the supply shock on the inflation side. That'll continue. That's already led to what we see now in the rush to the US dollar. I mean, the euro and the dollar are almost at parity. I think it's $1.05 dollars now to buy 1 euro. I mean, that's 20-30% upside on the dollar. The Japanese yen has gone way down. Emerging market countries have seen their currencies go way down. And you're talking countries like Turkey, Argentina. Many countries have got 90% reductions in the currency versus US dollar. So this brings us into what I see happening next, is just going to be an emerging market debt collapse. So watch this space. 2/3 of the world is probably most likely going to go bankrupt. The world countries that can print the currencies, like the United States dollar, are already technically bankrupt, but they can continue to print the world's reserve currency, so they have a stay of execution, you might say. But you've already seen it start to roil around the world problems. Pakistan, Sri Lanka, Peru, riots, people hitting the streets. And guess what? The food shortages haven't even started yet. So we're just in the first inning out of 9 innings of this thing that we're going to see debt market collapse. These countries will not be able to finance their debt in US dollars. When their currencies are down 30%, 40%, 50%, they are not going to be able to finance their debt. That roils back into the U.S. banking system. The U.S. banking system, when they have to deal with this and $1 quadrillion in derivatives that could go tits up, J.P. Morgan has already said the U.S. consumer this year will lose $9 trillion in wealth. That's just this year. The stock market's down 16%. That's just the first. That's just the first part of this thing. What we got coming. So all this will conclude eventually into a credit event again. When a credit event again occurs again, you're going to have to get a Fed bailout. That's where you see the Fed balance sheet go from 9 to 10 trillion to 50 trillion. However, now we have the inflation. The inflation won't allow it. The inflation, it will literally melt currencies, including the US dollar. You'll see Bitcoin go to $500,000 a coin or more. You will see absolute financial wipeout of every asset that's anywhere linked to fiat and not backed up by something. Commodities will skyrocket. We could be in for a 5-year, 10-year war here in Ukraine. That could escalate. That could spread to Europe. So I don't see the establishment being able to hold the system together at this point. It was a shock that they did in 2008 with the explosive money printing, and they just stuffed printed money all over the world. And it worked. It brought things back to normalcy for a while. But the imbalances were never corrected. So that's where I think we are. We are beyond repair in the financial system. The world's bifurcating around U.S. or China. The global South's going around China. The financial system looks very, very at a precipice at this point. We could see more dislocation in the stock markets, but what's going to happen? Does the Fed come in and buy everything? You've already seen that in Japan. Japan's a financial basket case. The government owns half the government debt. It's left pocket to right pocket. Europe, they're not going to be able to manufacture anything with their oil prices and their electricity prices right now. That's on shutdown mode. So stay tuned. I don't think we've seen anywhere near the reporting yet on what's going to happen with the financial system. The U.S. at everything is going to demand we avoid a credit event. If we get a credit event, this entire economy stops. The world's savings is mainly in USD. Countries that have unstable currencies save in US dollar. It's become the last bastion, last redoubt in this market. But if that goes, if a credit event happens globally and the market stops again in the U.S., we're already way below in terms of real economic numbers here in the United States. I mean, give you an example. Last year we made 13 million cars. We made 18 million 20 years ago. So we've added 50 million people, and we make almost half of the vehicles we did 20 years ago. So there is a lot of that's due to chip production. We can't get the chips now. A lot of other supply disruptions. So that's a whole other video on supply disruption, which I'm pretty tuned in, which I can do a video about at another point. But this really wanted to focus on the global financial system. Watch the credit event. Be careful of bear market rallies in the stock market, because they will happen. We had 8 down weeks in a row, which has never happened before in the history of the stock market here in the U.S. It popped last week. That could continue for a few more weeks, but we could expect more turbulence ahead. So everybody stay safe out there, and talk to you in the next video. Cheers.